also climbing just a little bit, but holding in that range. Crude also really not moving at $98, $99. Brent crude at 95 or 96. The inflation number wasn't a surprise. We knew it was going to come, but incredible inflation in the last month. Joining us to talk about this is Mira Pandit, JP Morgan Asset Management Global Market Strategist. Mira, almost 1 full % month over month for the headline number, and more to come. I guess this isn't for equities.
Well, ultimately, it was something that was expected. We knew we were going to something in the threes or higher when we looked at headline inflation. And a jump from gasoline. And the good news is that three-fourths of that overall increase did come from gasoline. So it's not coming from a variety of other sources. And when you look at core inflation, that is still relatively tame, just 0.2% increase. But you look at that year-over-year number, and it's still in the mid-twos, and that's going to be something that the Fed wants to continue to see come down and make progress. So it's almost from an inflation front a little bit less about the oil impacts, because we know that over time that will recede. But the question here is, how does it potentially feed into core over time if it does?
Yeah.
Or do we see some more progress there that keeps the Fed probably on hold for the time being, but nonetheless not as worried about it as, say, in 2022?
I mean, it's got to feed into the core before it recedes, right, Mira? I got a IB from my buddy Joe Brusuelas at RSM, and his take is ouch, first of all. And then he says, hard to believe this is not going to bleed through to underlying inflation.
I'm a little bit more optimistic for a couple of reasons. One, you are going to see some mechanical higher shelter prices in the next couple of months. But after that, we are seeing a general downward pressure in shelter. Less immigration means less upward pressure on areas like rents. Again, I think the core goods component as it relates to tariffs should slow down over the course of the year. And then I also think, look, this isn't 2022, where outside of headline inflation, you still had 5% inflation on the core measure. Ultimately, if we think about where we are today, that's relatively contained. And if consumers are spending more at the pump and they're spending more on food, then that potentially takes away from some of their spending in other categories. We don't have the type of fiscal stimulus that we had in 2022 when consumers were flush. So ultimately, I do think that actually that higher headline inflation, when you think about the overall budget, could potentially cut into that core a little bit and help to ease that. Slow growth a bit as well. And I think that's kind of what keeps the Fed in check as well.
And that argument is the likes that we've heard from PIMCO, for example, saying you should be buying. Bonds, that growth is the bigger concern, not inflation. How do you play that into a portfolio if that could be the outcome of what we see from higher energy prices?
Ultimately, think that we have to think about the whole picture here, which is if the consumer starts to hurt and if the consumer starts to struggle, it still looks like we're going to get some offsetting impact. From the elevated tax refunds, so that should buffer the consumer a bit. But if the consumer does start struggle, we're probably going to get more fiscal stimulus. This is a midterm election year, so it actually hasn't changed our growth forecast all that much. I think some elements of the timing and the construction of inflation and growth have shifted a little bit, but our overall forecast for inflation is slow by the end of the year after peaking, because again, no matter what, the oil thing changes the shape of inflation, but we expected higher tax refunds to potentially push up inflation. So we still follow that same trajectory. We still likely see trend or slightly below trend growth, in which case it hasn't changed our overall investment thesis all that much.
I want to talk a little bit about AI, the threat from it, software, and market positioning, because this is something that Danny and I have been talking about lately every morning. When we see a sell-off in software stocks now, is that because people are freaked out that AI is going to eat software's lunch, or is it because they can now sort of post-war, if you will, get short again after flattening out over March?
I think that the AI displacement fears really did play out in the first 2 months or so of the year. I don't think we've gotten necessarily new news. Now, with some of the things coming down the pike from some of the major model producers, maybe this does give us a little bit of new news. But I do think what we're struggling with here is sentiment. People are looking for reasons to take a breather after the last 3 years of double-digit returns on the markets. But ultimately, the challenge when we think about investing with tech right now is, yes, if you look at the Mag 7, valuations have come down from 29x to about 24x. You're also seeing that the fundamentals still look really solid when you think about 25% earnings growth this year and good expectations there overall with upward revisions, but it's still a third of your portfolio. So that does create challenges in terms of a buy the dip around tech. And then software, look, I think that the challenges will be long-term. Even if software isn't displaced fully, you're still going to see the economics of that model change as it goes sort of from a per head to more of a compute cost issue.
One of the other interesting dynamics of this market year to date has been the fact that small caps have outperformed so much, which feels pretty remarkable just given years of chronic underperformance. By 6.5 percentage points is how much they're beating the S&P, the Russell 2000. What's underlying that, and is it something that can continue?
Ultimately, we're not likely to see the Fed cut massively. We're not likely to see accelerating growth. We're not at the start of the new cycle. I think there is some excitement about potential earnings growth, but what we've seen in prior years, in the last couple of years in particular, is that there's sky-high expectations for profits, but they undershoot a lot by the end of the year in small cap, whereas that dynamic has been far less pronounced in large and mid cap, where you see maybe a little bit of a decay in earnings in terms of expectations versus reality. So I worry a little bit about that profitability dynamic within small cap. I do think it's just more of a sentiment rotation, because even areas like energy, for example, were up 25% before the war, an area that struggled last year. So I think that part of this is let's go to some of the places that we haven't been in recent years, rather than here's a durable trend in areas like small cap.
And Mira, we're going to have to end it there. Thank you so much for enjoying it. Enjoy the rest of your Friday and your weekend. That's Mira Pandit of JP Morgan Asset Management. About 9 minutes into your trading day, and we are headed for an 8th consecutive day of gains. If we can end here, this will be the longest winning streak in just under a year. In 11 months, we have not seen 8 days of gains. What are we seeing? It's kind of this weird dynamic that Matt and I have been talking about. The winners are semis and the losers are software stocks, two trades that have literally nothing to do with war. But is this all about hedge fund positioning? Broadcom, Amazon, NVIDIA, Meta, those are at the top of the pile. Again, I mentioned how some of the semis are doing well, Applied Materials, Lam Research. You go into the loser column, and you got some software stocks in there. Palo Alto, for example, ServiceNow. It is the stocks that hedge funds love to short. Palantir is down 4%. Maybe there's a bit of a cyber play going on with that scary model from Anthropic, which they refuse to release to the public. If you look at the individual sectors and how they're performing this morning, materials, consumer discretionary, and communication and info tech doing well. I want to flag financials is at the bottom of the pile. And if Joe in the control room, if you could be so kind as to click on financials, I want to show you what the, oh, you can't see what the worst thing is. I promise if this screen were able to, there we go, we can scroll down. Ares is at the bottom of the pile. That is down 3.4%. We learned this morning that the fundraising for its new private equity fund that it's targeting, a much, much smaller fund. Is that concerns about what's happening, their ability to fundraise, or Matt, is it just the fact that it comes off the back after record fundraising for private credit for Ares last year? So either way, it's a big step down after that.
It is, regardless, it is something that we're going to talk about a little bit later on. So we're going to focus in with one of Wall Street's top lawyers on the risks in private credit. Coming up, big bank earnings are about to kick off, just as Scott Bessent and Jerome Powell warn CEOs of the biggest banks outside of Jamie Dimon about an AI threat that maybe he already knew about and was ahead of. We'll discuss with Goldman Sachs analyst Richard Ramsden next. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back for another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good looking trophies.
1 and 1 is 3 in sports, not 2. And it's because his imagination. That 3 is putting in a way yourself hit the home run.
Erica Ayers-Badon.
I'm a high energy board member. I'm very passionate. I have a lot of
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television. A little over 10 minutes into your trading day, and some of the biggest of the gains now starting to fade. We're still up about 1/10 for the S&P. NASDAQ that outperforms the semis have a really good day. Brent crude still up 0.25%. So let's get you some top calls and analyst action that we are following this morning. Piper Sandler, they downgrade Nike, citing concerns that athleisure is reaching saturation across the industry and may be at peak levels. Those shares down more than 1%. Next up, Mizuho, they've upgraded Shake Shack. They say the stock looks cheap, momentum is building. They also cite extra boost from tax refunds. And the World Cup, really people are spending their tax refunds on Shake Shack? Maybe, I don't know. Finally, CFRA upgrades Meta to a strong buy, saying it's set up to win big in digital ads while turning AI into a real moneymaker, helped by new models, cost cuts, and a strong core business that could drive its next wave of growth. Those shares up 0.8%, Matt.
I've had to think about it, and
Yes.
you know, they do have a burger called I think it's Smoke Shack.
Okay.
And it is
What does that have to do
delicious.
with tax refunds? I'm not going to spend my tax refund money on just like more Shake Shack.
I mean, dollars are fungible, right? So it doesn't
guess.
matter what you're spending them on.
I guess, yeah, you're just
Shake
spending
Shack
more and eating out.
is in
and-
there. Let's talk about money as we focus on that theme. Scott Besson and Jerome Powell have summoned Wall Street's biggest CEOs over a new threat: AI-driven cyber risk. The warning comes just as earnings season kicks off, with the biggest banks expected to post solid first quarter results. Joining us to talk about the earnings part of that is Richard Ramson. He runs the financials group at Goldman Sachs Research. And Richard, we called you in to talk about earnings and how the banks are doing financially. But just while you're here, how unusual is it for the Federal Reserve Chair and the Treasury Secretary to call a meeting, an unannounced meeting, with the biggest Wall Street CEOs?
Definitely not a regular event, but obviously it does happen, you know. And I think in this instance, I think it probably speaks to the fact that, you know, AI is moving incredibly quickly, and it obviously gives the banks a lot of opportunities around efficiency, but there are obviously threats that AI brings to bear too. I think what most banks will tell you is they're very good at protecting against what they know in cybersecurity, but it's very difficult to protect against what you don't know. So this type of public-private partnership where, you know, the government shares information with the industry, I think is incredibly important for the industry just to be aware of threats that are out there that perhaps they wouldn't have known if it was just up to them. So I think it speaks to the fact that this is obviously a key area of focus, but I think it also speaks to the fact that this is an area where there is a lot of cooperation between the administration and the government and the industry.
This is an issue where if there hadn't been a meeting and there's a blow up later, we would all be saying, why didn't the Fed chair, you know, and the Treasury Secretary call a meeting? So it does seem like good management.
It does seem like good management, even though Jamie Dimon isn't there, and you'd think maybe he should be there as the representative of the biggest bank. But still, beyond that, I mean, I'm really interested to hear what they say about AI on their earnings calls. But just what do you want to hear from the banks as earnings gets kicked off on Monday from Goldman Sachs? What are sort of like the top line items that you're like, these are the outstanding pieces, and I want to learn about how they stand?
Look, I think earnings is going to break down into two pieces. I mean, the first is obviously the results themselves, and Matt, I think as you said, the results I think are going to be very good. You know, the banks are going to see mid-single-digit net interest income growth. The reason is that loan growth is very robust. It's actually the highest level of loan growth that we've seen since 2022. Fee income is going to be very healthy, especially on the capital markets side. There's been a lot of deal activity, but trading activity has clearly benefited from the volatility. The banks are showing very good cost discipline. We're expecting north of 200 basis points of operating leverage, and I think on the credit side, it's going to be pretty benign. Now, the trouble is this is all in the past. I mean, what people care about is the forward. And there are several things that I think people are really going to be focused on. The first is, since these banks last spoke, a lot has changed. The two big changes are interest rate expectations. So when they last spoke, the market was expecting 2, maybe even 3 rate cuts. We're now expecting potentially no rate cuts, or maybe even a rate hike, depending on what happens over the course of the year.
That's good for the banks, right?
It's good for the banks in one respect, in that their balance sheets are obviously positioned for higher rates, but the reason that interest rates are going up is not positive, which is it's more concerns around inflation and potentially stagflation. And that could have an impact on things like loan growth and on deposit costs and deposit competition. So I do think analysts and investors are going to want to hear, look, how are you thinking about this very significant change in rate structures, and what does it mean for your outlook, given the very broad range of outcomes? I think, look, the second thing that people are going to want to hear is, oil prices, $100. What does that mean for consumer credit quality? It is clearly a concern in consumer finance, less of a concern for the large banks, but I think there will be a lot of questions around, look, what does this mean as you think about both consumer spending trends, but also the risk that you're going to see a deterioration in asset quality from very, very benign levels.
Are you optimistic, though, Richard, that, Danny has a weekly deals show every Wednesday at noon for an hour, and she's been hearing that deals are still getting done,
regardless first quarter,
regardless of the war, which is pretty great, right? There's a war in the Middle East, and they're still doing deals even there. And obviously, the trading business must be on fire.
Look, I think there is a bifurcation on the deal side between financial sponsors and strategic activity. And what I'm expecting to hear is, look, financial sponsors to a degree are on pause. Bid-offer spreads have obviously... Financing market in certain areas are more difficult and more expensive. But you're right. I mean, on the strategic side, deals are still happening, and they are very large, consequential deals that have very complex financing requirements. And obviously, the big banks typically do very well in that type of deal environment. They typically punch above their weight from a market share perspective. On the trading side, no question. Look, this is going to be a very good quarter. We're expecting that trading revenues are going to be up double-digit year on year. It's probably going to be a record trading trading quarter in terms of just dollars. But again, I think the focus is going to be on the outlook. Have we moved from good volatility to bad volatility in certain markets? And I think the focus will be on rate markets in particular and commodity markets. And is there an expectation that you are going to see a fade in terms of trading revenues heading into the second half, especially given the de-risking that we've seen in the hedge fund community?
All right, Richard, great having you here. Hope we can get you back soon. Richard Branson there of Goldman Sachs Research, covering the financials as we get prepared for earnings season to kick off. Coming up, software shares slumping as investors continue to gauge the AI risk. We'll talk about whether it's that or positioning next. It's ETF Friday. This is Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Software shares continue to sink amid AI fears. The iShares expanded tech software sector ETF is down over 5 days, 7.5%. Joining us now is Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence. So, Anurag, what's the story here? Is this, as Danny and I have been talking about for weeks now, is this really investors' pessimism on software due to AI, or is it maybe positioning? Because we did see software have a fantastic run at the beginning of March.
I think it's a little bit of both, because every time there's a big model release, this comes back again. Or another way to think about it is whenever there is de-risking in the market, people rush back towards the memory names and short the software as they were doing before. So I think it's a little bit of both. And, frankly speaking, it's not going to change anytime soon, because I'm sure the next big LLM provider is going to come up with their model over the next, let's say, a couple of months, and then you're going to see the same headline risk that goes into it. I think the biggest issue that we see in the near term is because of the macro weakness, we will expect estimates to cut down over the next 6 months. And then as soon as that happens, it's going to be a vicious cycle again. People say, well, their growth is slowing down because of AI. So I think it's going to be a while before we see a positioning of software in terms of acceleration of revenue, and I think that can help the sentiment of the entire group.
Anurag, less than a minute here, but are semiconductors just the other side of this trade? SMH, the ETF that tracks them, is up 12% this week.
Yeah, it's the same thing. That's what I'm saying. As soon as you get into that realm, because one of the things is very clear right now, AI infrastructure demand is very strong. That's something what we discussed yesterday with AWS and all the everything that's happening on that side. And you will see all the CoreWeave deals happening right now. So we know what's working. What we don't know is how software will pan out in the second half of this year.
All right, Anurag. On a Bloomberg Intelligence, have to get you back if Anthropic's mythos comes for any of us. Coming up in the next hour, Joanna Shu of the University of Michigan, following fresh consumer sentiment data. Top Wall Street lawyer Richard Farley on private credit concerns, and Vlad Richter, the CEO of cybersecurity startup Fencer, on the mythos threat. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 60-65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Is CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. Wheels up on Air Force Two as Vice President Vance heads to Pakistan for U.S.-Iran peace talks.
If they're going to try to play us, then they're going to find that the negotiating team is not that receptive. So we're going to try to have a positive negotiation. The president has gave us some pretty clear guidelines.
Correspondent Imtiaz Tayyab is covering the negotiations in Islamabad.
The fact that they are talking is a huge step in a direction that many here in the region are hoping this conflict is moving. The Gulf, as we know, has suffered enormously during this war. The Strait of Hormuz, where 20% of the world's energy passes through, that has been choked off, affecting so much of the world's economy.
The war has led to the biggest jump in inflation in 4 years. Consumer prices spiked 3.3% in March, thanks mostly to rising gas prices. CBS's Kelly O'Grady.
It was driven all by energy. We've been talking about this for a month, right? We talk about oil every day. We talk about gas prices. And that was really where you saw the big jump. Food, though, was flat.
Average gas prices at $4.15 a gallon today. A new report finds property taxes are rising even faster than inflation. CBS's Michael Wallace.
The real estate data firm Adam says property taxes rose 3.7% in 2025 from a year earlier. Delaware property owners saw the biggest tax increase, 18%. Nationwide, the average property tax bill was $4,427.
New Jersey had the highest taxes, West Virginia the lowest. Property taxes actually fell in 10 states, most of them in the West. 4 astronauts who made history by looping the far side of the moon, scheduled to return to Earth with splashdown in the Pacific. Diego later today.
I'm Peter King at the Kennedy Space Center. Artemis 2 will have a blazing hot and fast re-entry. During the unpiloted Artemis 1 re-entry, chunks of the heat shield came off, prompting investigations and worries from experts inside and outside of NASA. Orion Deputy Program Manager Debbie Korth says mission Managers have mitigated the risk this time.
I think, we did a very thorough job and have confidence in the heat shield able to perform this mission. We changed the mission design that will allow us to fly the heat shield we have.
An investigation underway into whether AI played a part in last year's mass shooting at State University. Prosecutors say the student gunman who it killed 2 people and wounded 6 others had asked ChatGPT about the busiest time at the student union. State Attorney General James Upmeyer.
AI should exist to supplement, support, and advance mankind, not lead to an existential crisis or our ultimate demise.
This is CBS News. Looking to make a move? The Motor City's ready to sweeten the deal.
After decades of population loss, Detroit is now the Michigan city seeing the biggest growth, and they want to get bigger. The Move Detroit Coalition has created a new initiative awarding $500,000 to 313 current and future Detroiters. Those who already live in the city or are returning after leaving are eligible for up to $15,000. Others can apply for $1,000 in financial support. The money can be used to buy a home, toward rent, for relocation costs, business projects, and renovations. Taylor Dietz for CBS News, Detroit.
Forget New England. Taylor Swift and Travis Kelce may have other plans for their big day. A source tells the New York Post your English teacher and your gym teacher will be tying the knot in New York City July 3rd. That's the day before Swift's favorite holiday. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu. Bloomberg Business App.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. Wide audience. We are also on the video thing, YouTube, and go to Bloomberg.com, and that's where you'll find us streaming over there. Scarlett Fu is out today, but not to worry. Alex Semenova is sitting in for Scarlett for the next 2 hours. We appreciate you coming in.
Great to be here
Alex,
with you.
Good stuff there. I believe Scarlett will be back on Monday, so that's a good thing. This is the Bloomberg Intelligence Program. Coming up, we're going to check in with Joanne Shu, University of Michigan. The UMich sentiment data came out today, a little bit weaker than expected. We'll break that down with Joanne. Policy analyst and managing director at Raymond James, great firm down there in Florida. He'll give us some thoughts on what's happening in Iran and how the impacts markets going forward. David Havens, Bloomberg Intelligence Senior Credit Analyst on private credit here. How systemic is it in terms of private credit? And then we need to check in with Ellen Wald, one of our go-to voices. Global energy. What's your thoughts about the Strait of Hormuz and oil going forward? So a lot coming up. Couple of hours. Let's kick it all off with Alexis Christoph. Bloomberg Business Flash.
All right, thanks, Paul. On this Bloomberg Business Flash is brought to you by Eisner Amper. Most advisors tell you what happened. Eisner Amper tells you what to do. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford. Yes, EisnerAmper.com. Stocks are on track for their best week since May. Officials from the U.S. and Iran are set to meet this weekend in Pakistan to discuss shipping through the Strait. S&P 500 now up just 3 points. We've got the Dow Jones Industrial Average, though, down 145. NASDAQ Composite up 77. Brent crude at 96.19 the barrel, up about 0.3%. Intermediate now climbing 0.7%. Its session high here at 98.57. U.S. inflation jumped in March by the most in nearly 4 years. Record in gas prices. Meantime, the University of Michigan survey finds inflation worries send consumer sentiment to a record low. In stock news, we've got shares of CoreWeave up about 5% after Anthropic agreed to rent data center capacity from CoreWeave. And Taiwan Semiconductor also having a good day. That stock up better than 2.5% after reporting a 35% increase in quarterly revenue. Round two of Masters underway at Augusta. At last check, we've got Sam Burns and Rory McIlroy atop the leaderboard. They're tied there, each at 5 under par. And that's your Bloomberg Business Flash, Paul and Alex today. And you're happy about this, Paul?
I put a couple shekels on Rory. Terrible, terrible odds, but I got to stick with the Irish thing.
There you go.
Rory to repeat there. So, Alexis Christophers, thank you so much. We appreciate that. We've got Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. This is the Bloomberg Intelligence Program. Taking a look at the market, as Alexis was just reporting, kind of a mixed outlook there on the stocks and bonds here. But let's see what's moving on the move today. And some of these stock movers, we do that with Bloomberg's Avalon for now. Avalon, what are you looking at?
Well, we can go ahead and start off in the healthcare world. That's Organon, ticker OGN.
Jersey City.
Oh, yeah. Up about 25% right now for most intraday on record. That's after the Economic Times reports that Sun Pharmaceutical, which for those unfamiliar is a generic pharmaceutical maker based out of India, is considering a $12 billion offer to take over that debt-ridden company. Organon is a reproductive health company behind a lot of birth control products like Nexplanon, and Evercore out with a note saying that while it remains unclear if the deal will actually materialize, the chatter does bode well for valuations in the broader pharmaceutical space.
Avalon, we're also coming up on almost a year since CoreWeave went public now. Crazy how quickly time goes by. What are you watching there with that company?
Absolutely. That's ticker CRWV. It is currently up about 5.6%. That's after Anthropic agreed to rent data center capacity from CoreWeave. The multi-year deal will help Anthropic build out Claude AI. While the financial details were not disclosed, CoreWeave now counts the 4 largest AI model makers, so Anthropic, OpenAI, Google, and Meta all as customers, which many analysts are already saying that that's a very bullish sign for the company.
Yeah, sounds, I mean, they're just in a nexus of all that spending, it seems like. What is Kyivstar?
Yeah, that's ticker KYIV, slightly different one. It is currently up now about 4.7%. That's after Ukraine's top negotiator with Russia said that he sees progress toward a potential peace deal. This Ukrainian telecommunications stock is kind of seen as a proxy for the war and is expected to benefit a lot once the war ends. At least that's what Oppenheimer thinks. They said in a note in September that reconstruction efforts will offer very meaningful upside for those shares. And we'll see. That top negotiator told Bloomberg that he doesn't think it will be long.
All right, so looking at that, it's about a $2.6 billion U.S. Market cap stock, up about 5% today, down about 12% year to date, but certainly could be a player in a reconstruction situation there. We'll keep an eye on that going forward here. Again, red and green on the screen here. So Avalon Purnell, thanks so much for that. We appreciate it. And for more reports like that, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Looking at the eco data today, again, we had some University of Michigan sentiment data came in here. Just the headline, I'll just give it to you, folks. Came in at 50.1. The consensus was 53.4, and last period was 55.8. So a disappointment on the sentiment data. Let's break it down with the folks at University of Michigan. They don't just make football players; they also make really, really good economists, like Joanne Shu, surveys of consumers director at the University of Michigan. Joanne, what are some of the takeaways from your data from this month?
Consumers are speaking loud and clear. They are very, very frustrated by the persistence of high prices, and they're feeling very weighed down with the cost of living. This is not much of a surprise, particularly given this morning's CPI print, which consumers had already incorporated these price hikes from last month into their views. And this 25% increase in gas prices, these prices at the pump that are really weighing down on consumers. Their short-term outlook has deteriorated quite a bit. But there is a glimmer of hope. The long-term outlook did not sour nearly as much as the short run did. But at this moment, consumers are very frustrated and they're struggling with cost of living issues.
Joanne, a lot of people are feeling echoes of 2022. How does this reading compare historically to previous episodes of geopolitical turmoil and inflation worries?
This is a historic low and is very, very low given, and sentiment readings for the past year have all been actually very, very low. And so consumers have been frustrated for some time. Given that we're in a wartime situation, it's not surprising that consumers have kind of heightened awareness and heightened worries about what's going on in the economy. Interestingly, we didn't really see too much of a reaction with respect to labor market expectations. They did sour a little bit relative to last month, but within range of what we were seeing in the last year. And that stands in contrast to personal finance expectations and business conditions. Those are much worse than we had been seeing previously.
Joanne, the administration officials, representatives are making the argument that this impact on energy is short-term. Once the war is over, and again, their negotiations for peace starting this weekend in Pakistan. Once this war is over, things will go back to normal. Is that something that you're seeing in your data?
There are some consumers who hold to that belief that it is possible that one, this conflict will not last very long, and two, when this conflict resolves, that we may have energy prices that return to what they were before, or even be even lower. But there's so much uncertainty around this, and there's also a larger proportion of consumers who are worried that there will be consequences to this. To this Iran conflict that's going to last more than a few weeks, that it's going to last into the year ahead and potentially beyond that. Many consumers are bracing for inflation to increase quite a bit over the next year, if not longer.
How close, Joanne, should policymakers be watching this survey compared to the hard data? At what point does it get their attention?
You know, our data is really showing, is forward-looking, whereas what we often call hard data is always backward-looking. So we are taking a pulse of what consumers are feeling right now. And as I mentioned, consumers have been, showing very, very low sentiment, near historic lows for most of 2025 and for the first few months this year as well. And indeed, all the incoming data on consumer spending from Q4, from the first quarter of this year, have shown weakness as well. And so it shows that, you know, consumers' kind of dour feelings about the economy, it's passing through to the decisions that they make. It may not have been a massive pullback, but they're starting to pull back. And with this surge in gas prices and the possible pass-through later on, if the conflict continues, does not bode well for consumers going forward.
And your University of Michigan one-year inflation forecast, the consensus was 4.2, and that came in at 4.8. And it was 3.8 just a month ago. So a big surge in short-term inflation expectations. But longer term, as you mentioned, the 5 to 10-year inflation outlook kind of came in right in line at 3.4%. So I guess that kind of suggests, Joanne, that I guess consumers are pretty realistic in their outlook that this is more of a short-term event.
That's their view at this moment, but there continues to be a tremendous amount of uncertainty over how the Middle East conflict is going to develop, and to what extent supply disruptions coming from the Strait of Hormuz are going to persist. So, you know, I don't think that people should hold on to this 3.4, 5 to 10-year inflation expectations numbers as something that is definitively going to keep going for the foreseeable future. Depending on how things look with geopolitical events and supply disruptions, this could very well change quite quickly in the months ahead.
All right, very good. Joanne, thank you so much. We really appreciate it. Joanne Shu, Surveys of Consumers Director at the University of Michigan. Again, just the highlight number, the headline number, University of Michigan current conditions outlook came in at 50.1. Consensus was 53.4. And last month was 55.8. So a big drop there, reflecting higher short-term inflation pressures stemming from the war in Iran. Alex, what are you looking at these days from the equities desk?
Yeah, something really interesting that we've observed about kind of the rebound that we've had is that there's no euphoria in it. So initially when we saw there was that 2% up day, it was very evidently a short squeeze. We saw Goldman's basket of most shorted stocks rallying. We saw profitless tech rallying. But more recently, over the past 7 days, a Goldman basket of companies with strong balance sheets has actually been outperforming companies with weak balance sheets. So signs that there is some durability in this, that it's not just investors kind of, you know, buying oversold levels, that there's some confidence that we'll get a resolution soon.
Yeah, I'm looking at the VIX, and we're now below 19. So that really gets your attention there, getting back to a more quiescent kind of view of markets here, maybe a little bit of the panic or just the angst of investors in this market. So we'll see how that plays out. And oil, which has been driving a lot of these equity markets and bond markets for the last 6-7 weeks, oil's pretty steady here, unchanged. WTI right around just under $98 per barrel. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are mixed ahead of this weekend's planned peace talks. S&P futures up about 12 points, but Dow Jones Industrial Average now down 114. NASDAQ Composite rallying 132 points. Consumer prices jumped the most in nearly 4 years in March, driven by a record increase in gas prices. That report largely in line with estimates. Taking a look at oil, a little change. Brent crude at $95.63 a barrel. West Texas Intermediate $97.75 the barrel. The Bloomberg Dollar Spot Index $1197.10. We've got the 10-year yield at 4.30%. And the 2-year at 3.78%. In stock news, NVIDIA-backed Lumentum up about 1%. The specialized chip maker said demand from the biggest U.S. tech companies is accelerating. We've got shares of the women's healthcare company Organon up 25% on a report that India's Sun Pharmaceutical is readying a $12 billion bid for the company. And Ares Management is planning a smaller flagship U.S. direct lending fund. That's to help speed up the deployment of capital. Shares of Ares down 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Alex.
All right, Alexis Christoforous, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com as well. Big weekend for this war in Iran. We've got the representatives for the U.S. led by Vice President Vance heading over to Pakistan. The Iranians are doing the same. Presumably the Israelis will be there as well, and hopefully they can hammer out a longer-term ceasefire for this war in Iran. We also got Congress coming back to Washington Monday, so a lot's going to be happening, I think, in the next few days. We want to figure out what's going on there. Ed Mills, Managing Director and Washington Policy Analyst at Raymond James, which is a great regional firm. They punch way above their weight. I competed against them for many, many years. Some good folks there. Ed, what are your expectations here? What should our expectations be for these peace negotiations in Pakistan that are presumably starting tomorrow?
Yeah, Paul, there's probably 3 paths here. Path number 1 is they work it out. Path number 2, everything shuts down. And maybe the most likely is we get a kind of progress, but not a breakthrough. And to me, I think the 2 things that I'm watching the most there are we getting any additional ships through the Straits of Hormuz. That's one of the most tangible items. And number 2 is kind of, are there kind of ongoing actual kind of kinetic activity, not only in Iran, but as we look to Lebanon and kind of what Israel is doing there, how does that spill over attacks on other Gulf allies in the region? Those will all influence these kind of negotiations over the weekend.
Hey, Ed, I'm looking at a headline here that says J.D. Vance is warning Iran that the U.S. will not be played in negotiations. We've seen a lot of optimism from markets that we're nearing a de-escalation here. We're getting closer to a deal. Is there any disconnect in market expectations and maybe what the White House sees playing out here?
Yeah, Alex, that's a great question. So what we've been telling clients here at Raymond James is some level of skepticism has actually been very warranted throughout all of this. What we had earlier this week is we did avoid the worst case scenario. And I think what markets were looking at there was the more Trump escalates or threatens, the more severe it is, the more likely there is going to be a breakthrough. I think there's a view out there that President Trump absolutely wants to wrap this up. We are seeing kind of the impact on consumers. We're seeing the impact politically. We're getting closer and closer to that 60-day mark where it might be kind of an issue, kind of under the Wars Power Act, to continue this. And so when you take that all into consideration, the market does think that there is a desire to get this done. But does Iran want to outlast the United States? Is the United States and Israel on the same page? And there's so many unanswered questions, so that cynicism that we've been telling clients at Raymond James to have, I think is still appropriate. I think we avoid that worst case, but I'm not necessarily thinking that everything works out over the weekend and it's all clear sailing from here.
Ed, what's the political angle here? The polling suggests that this war is very unpopular with the American public, very little support for it, the polling indicates. And then there's also the collateral kind of damage for consumers, which is just higher gasoline prices plus some other inflationary price pressure here. What's the Republican Party? What's the play here?
Yeah, so Paul, I think if you asked me in January what was going to be the theme for 2026, I would have told you it was all about affordability. President Trump was concerned about the midterm elections, and any effort from Congress and from his administration was going to try to have targeted tariff relief, keep gas at or below $2 a gallon. That's completely thrown out the window. So Republicans were battling against a lot of headwinds to keep the House of Representatives. I think people assume that's even more of a likely turnover to Democrats. And now the attention's turning even more to the Senate. So what does that do in D.C.? I think that actually puts a lot more pressure on Republicans to try to get things done. We're going to see if they can get this reconciliation bill through. What's in it? Is there a lot more defense spending? Are there going to be an effort to have some sort of targeted relief to consumers? President Trump has talked about that tariff relief to consumers. I'm pretty skeptical, but I do think that political survival is what we're going to see as Congress comes back, and a little bit of panic to get some stuff done.
Ed, one of Trump's top advisors today warned that Beijing's involvement with Iran could potentially hurt U.S. and China relations if it hurts American interests. What is the risk here with China? What are the implications?
Yeah, Alex, so the original meeting between Trump and Xi has been rescheduled to the mid-May. It's really interesting because one of the big topics here at Raymond James has been Trump told his administration, do not do anything to disrupt the relationship between the United States and China, because China has stopped the flow of critical minerals and rare earth minerals in exchange for the kind of tariff that President Trump put on. That has been worked out. If we don't get those critical minerals, we don't get those rare earths, our industrial production in this country shuts down. And President Trump knows that. But there's an even greater issue right now is that we need those also for our military production. And China's not providing that. And so what we have seen in previous times between Trump and Xi, as they're getting closer to meeting, he tries to ramp things up, trying to see if he can get something else out of this. It was very clear that China was involved in the negotiations over the weekend, pushing Iran to accept this. And so, President Trump looks at China and says, about half of their oil comes from the Middle East. Is there an angle we can push here? Because there's things from China that we absolutely need. We can't disrupt it too much, but is there a little bit of leverage? That's the hope.
Ed, really appreciate it. Ed Mills, Managing Director and Washington Policy Analyst, a little firm called Raymond James, and he's down in Washington, D.C. Let's get back to these markets here. Just looking at the credit markets, one of the concerns, if you think back all the way back before the war with Iran started, one of the key issues for this marketplace was the private credit business. And do we have a credit problem in certain of the U.S. credit markets, particularly in the private credit market? So that kind of got put on the side burner with the war in Iran, but we're going to break it down. David Havens joins us here, Bloomberg Intelligence Senior Credit Analyst. And for the folks on radio, David walks in this studio dressed like we're the only ones keeping him from the first tee today. He's like ready to go. So we'll make this quick here. David, thanks so much for joining us here. You've been in this a long time. You've seen the growth of private credit. We have had some concerns over the last, couple, 3 months that there are maybe some credit risk. And that's always been the back of everybody's mind, a little bit of a fear. How do you think about private credit and credit quality?
Yeah, private credit has a lot of risk associated with it, but it also has controlled risk. The way that I'm dressed like a golfer today, but I also like to ski.
Okay.
And the way that I sort of think about credit markets is you've got, very safe credit markets that are, sort of like green beginner slopes. They're like government bonds and things like that. Private credit markets are kind of like the off-piste, out-of-bounds territories where you need to make sure you've got an avalanche rucksack with you, and a beacon. And these guys are prepared. They're good at underwriting, and so far actual problems within portfolios have been very limited, but there are obviously warning signs. People are concerned about the AI boom and the impact that might have on software loans. Obviously, private investors are concerned, or private wealth investors are concerned, because they've been asking for money back from some of the BDCs.
David, there's this news today that Ares is planning a smaller appetite for it going to be like amid these broader concerns about private credit? Do you expect it to be unscathed, given that Ares is a bigger name?
Well, Ares has a wonderful reputation, and Ares has a great track record, and people need to put money to work. You've got a choice as an investor. You can put your money in various places. You can keep it on the sidelines, wait for something better to happen. You've seen the Ares vehicle downsized from previous vehicles because there is a little bit less demand, but there's also been a tremendous amount of growth in the market up until then. So I think that we're just seeing a little bit of a pullback. I shouldn't say a little bit of a pullback, but I think that, over the long haul, this private credit area is probably going to continue to see pretty decent growth. People need income.
Yep. Is this, I guess what I've heard, or heard this characterized, some of the credit issues or concerns over the past several months, it's more of a liquidity issue than a credit quality issue, i.e. the quality is generally pretty solid there, as you mentioned, but if you're a retailer and you get spooked and you want to take some money out, you probably didn't read the fine print.
Correct. Even though the fine print is on page 1.
Yes. Yes.
But you're right. I think that people don't read the fine print. I think they wanted to take money out, and all of a sudden they're like, what? I can't get my money out of this? I can get my money out of almost anything. But that's not the case here, and it makes for bad press. And so I think that there's, a bit of now we're talking about retail investors, right, and private wealth. I think that there's a bit, there's a negative reaction to that, and it's a little bit of a negative feedback loop. The Ares vehicle that we're talking about a moment ago, that's an institutional vehicle, and I think that these, investors are a little bit more sober, take a longer term view.
We got this hotter CPI reading today, the biggest monthly jump since 2022, and there's this expectation from investors that, if this goes on with the war, we might be in a higher for longer rate regime once again. How exposed is private credit to that? What are the implications to the private credit market?
It's a double-edged sword. On the one hand, higher rates means that there's going to be more income coming into the lenders themselves, because they're floating rate lenders, so base rates go up, they're going to have more investment income coming in. It's not a bad thing. The edge of that sword is that you've got leveraged borrowers who have to scrimp by to make their interest payment. It's, every quarter or every period where they have to pay interest. They're going to stress if base rates rise. So it goes both ways.
David, thank you so much. Appreciate it. David Havens, we're going to let him get to the first tee. If you need a fourth, let me know. I can always make it. David Havens, credit analyst for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker studio. Kind of red and green on this screen here today, but I'm going to start with WTI crude oil. It's down about 0.4%. So let's call it steady. We had that spike. Mike McGlone said we probably saw the peak put in around 120 a barrel. Now pulling back with some expectation for some negotiations in the Middle East. So it'll be, I think, an important weekend to see what kind of news comes out of Pakistan in these negotiations.
Yeah, this has really been a headline-driven market. It's been incredible to see. As long as things are moving in the right direction, maybe some calm.
Absolutely. Coming up, we're going to check in with Ellen Wald. She's president of Transversal Consulting on the impact of Iran on the market. She go-to voices on the global energy market. She knows what's happening. And again, a little bit of stability there. Tom from the Upper East Side asked for a big we're higher, $73,000 per token. This is Bloomberg. Good morning.
Slow city lights, slow city lights, slow city lights, slow feels so right. 어제의 시간 멀어지고 slow city lights, I feel alive.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are mixed and oil is steady ahead of talks this weekend between the U.S. and Iran to discuss the fragile ceasefire and possibly reopening the Strait of Hormuz. The S&P 500 is up about 13 points at 6837. The Dow Jones Industrial Average is down about 80 points, and we've got the Nasdaq Composite climbing 156 points right now. Brent crude at 95.34 the barrel. That is down about 0.6%. WTI crude little changed at 97.90 the barrel, and the Bloomberg Dollar Spot Index now at 1197.17. We have got Bitcoin up nearly 1%, back above $73,000. Consumer prices in March saw the largest monthly gain in 4 years as the war with Iran sent gas prices skyrocketing past $4 a gallon. The University of Michigan survey finds that those mounting inflation worries pushed consumer sentiment to a record low in recent weeks. As for stock news, shares of Taiwan Semiconductor up now about 3% after reporting a 35% increase in quarterly revenue thanks to strong demand for its chips. And shares of Berkshire Hathaway also on the plus side today after selling $1.7 billion of yen-denominated bonds, marking its first such deal since Warren Buffett stepped down as CEO. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Alex.
Alexis, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and on Bloomberg.com as well. Well, the good news for Brent crude, it's down at $95. It is down from its recent high of 110 in the early days of the war. But the bad news is it's well above the $60 range it was trading at before the war here. So the question is, where do we go from here? And there's nobody better to ask that question to than Ellen Wald, president of Transversal Consulting and senior fellow at the Atlantic Council. Ellen, the negotiators are heading to Pakistan as we speak to begin some negotiations. But the fact is, the Strait of Hormuz is effectively still closed. What are you hearing from your contacts in the energy market?
I'm hearing that what we're seeing and the markets is not really reflecting the situation on the ground. I mean, we've got an area where no crude is effectively moving out, and maybe some Iranian crude is moving, but nothing more than before. And a ceasefire that after the ceasefire resulted in an attack on Kuwait and an attack on a Saudi pipeline, a vital pipeline that is now the result of which has cut their exports through the Red Sea. And so we're actually, I think, in a worse situation than before, given what's going on.
When it comes to supply, Ellen, how much of a role does OPEC have right now in potentially offsetting any disruptions?
OPEC's role right now is essentially nothing because OPEC could lift production, but it doesn't matter because the big producers in OPEC that have more spare capacity can't get that oil out anywhere. So essentially they mean nothing. If Saudi Arabia can't get oil out, if Iraq can't get oil out, if the UAE can't get oil out, then really what's the point of them producing? They've already filled up their storage facilities. So so really they're basically at a standstill. And I think that the issue we're facing right now is that Iran wants to maintain this status quo control over passage through the Strait of Hormuz, charging tolls, and you have to receive confirmation from the IRGC that it's okay to go. And if that's a starting point for these negotiations, then we're really in a bad situation. And in fact, the UAE has basically said, we can't stand for this. This cannot be allowed to stand. That runs contrary to all kinds of international maritime conventions. many of which countries in the Gulf are party to.
Ellen, quantify for us who's at risk if it's the status quo here, i.e. the strait remains closed or significantly closed. Because the U.S. is a net exporter, so probably not so much for the U.S., but how about the rest of the world? Who's exposed here?
I mean, everyone is exposed. Everyone basically, except maybe the U.S. and Canada, are exposed. It basically means that tankers are going to have to pay this fee to Iran or to whatever entity is going to collect this, and even if that doesn't directly affect U.S. consumers, it will, because it's going to impact. That is going to be passed around the entire world. That cost is going to be passed on the price of oil. I mean, major oil companies that say Chevron, for example, they have assets. They own part of the oil fields in Iraq, and they make money off of that production, and so they're going to be paying those fees, and they're going to pass that on to consumers everywhere.
Ellen, I've heard folks on Wall Street argue that the economy, the consumer, are a little bit more insulated to oil shocks, a little bit more resilient than in the past. How true is that?
Well, let's put it this way. Europe is weeks away from a jet fuel shortage, and we're not weeks away from a jet fuel shortage in the United States, but that doesn't mean we're unaffected. So we're in a better situation than Europe is. We're in a better situation than Asia is, but gasoline prices are still up. Diesel prices are extremely high. There's no indication that those are going to fall. And when diesel prices are up, that impacts all levels of the economy, because diesel is what our trucking industry runs on. That affects food prices, anything that gets transported by truck, essentially. Construction industry is also affected, and so we're not immune, even if we're not experiencing shortages like other countries are.
What is a realistic solution here, Ellen? Is it just going back to the status quo ex ante here, or is there some other solution that you and the folks in the industry see here?
Yeah, I think, going back to the status quo would probably be better than what we have now, except at the same time, I don't think there is any going back, because at this point, Iran or the IRGC or whoever is running the show over there has realized that simply by threatening ships with drones or missiles, they don't even have to threaten them with boats the way they used to. They can just threaten them with drones, that they can effectively shut down the traffic. And so I don't think there is any possibility of going back to where we were before. We have to move forward. There has to be some way to remove this threat entirely from the Strait of Hormuz, because it is not the same thing as the Suez Canal or the Panama Canal. Iran does not own this waterway. This is an international waterway, and freedom of the seas is an incredibly important global principle that we've fought world wars over. So, this cannot be allowed to stand, and they have to reach some sort of negotiation whereby Iran backs off.
If in the best case scenario, let's say we do reach a deal soon, the Strait of Hormuz is reopened, how long before things normalize? How long before we see oil come down substantially enough that it no longer risks eroding the economy?
That's a really great question. I mean, the first thing we've got to do is we've got to get through this backlog of ships. I mean, the first ships are now reaching Asia that had left right at the end, right before the crisis started. So we're in a major backlog, and it's going to take time to clear that out. We're also in a state where we don't have the same LNG capacity that we used to, and it could take years to get that back. And so I think if the waivers to purchase Russian oil are maintained, then we're in less danger of eroding the economy. But if this situation gets resolved and then those waivers for Russia disappear, then it's still going to take a while to get things back to where they're going. I'd say at least a month or two before we could say we're anywhere approaching a place where the costs aren't eroding the economy.
Ellen, just 30 seconds. Is there a scenario where part of the negotiation, Iran says, okay, it's now open again? Would that be enough?
Unless, no, they need to provide assurances to the ships and the insurers that it's safe to travel. That means they can't just say, take your chances and we'll see. They need actual assurances that they can pass safely.
All right. Very good. Ellen Wald, a lot to be decided there for sure. Ellen Wald, president of Transversal Consulting and a senior fellow at the Atlantic Council down there in Florida. So again, the one of the key issues to be negotiated between all the parties is the Strait of Hormuz, and can you in fact create, I guess, some type of agreement that does give that level of insurance to shippers and insurance companies? That's, I guess, the end goal.
Yeah, and then another question, Paul, as Ellen discussed, it's not as simple as the president saying that a deal has been reached. We have to see things normalize. It's going to take some time before we see oil prices come down.
Yep, absolutely. So again, looking at WTI, just under $99 per barrel. It's up just about $1 here today. Brent absolutely unchanged on the day, just below $96. So again, down from the highs at the beginning of the war, still, 40-50% higher than where they were prior to the war. So that is a wartime premium in there. The question is, how does that premium come out of the price and over what time frame? This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we've got Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive studio, streaming live on YouTube as well. Let's talk about consumer. Let's talk about the consumer. What are they buying? And one of the great places to look is sneakers. And you look at Nike, and you can do that with Poonam Goyal, Senior U.S. E-commerce and Retail Analyst at Bloomberg Intelligence. There's so many puts and takes for the Nike because, I mean, it's a product everybody knows. It's a global product, but that has pluses and minuses. Poonam, what's the Nike story here? I know they've had a lot of challenges with China. They've had a lot of challenges managing their inventory, tariffs, like a lot of other companies. What's the Nike story right now, Poonam?
Yeah, so Nike is basically going under a turnaround. There's a lot of things that they need to fix, but there are things that they have fixed. So let's start with the biggest piece of the business, which is North America. In North America, since Elliott Hill has taken helm, they have made improvements. In fact, sales have turned positive there, and that's a sign that the initiatives put in place, getting the right product back in, working on speed, clearing out old product, reducing inventory, it's all paying off, and we expect that to continue. The challenge, however, has been China. As we know, we spoke about this earlier, China is a market that not just Nike, but every athleisure company is eyeing for growth, for long-term growth. And in China, Nike has had major hiccups. So the playbook there is to repeat what they did in North America to fix the business, but it's not going to happen overnight. It is going to take time. And I think it's just about being patient and watching them execute against China as well.
Chinese consumers broadly have just been shifting to more local brands. What will it take for Nike to recapture their appetite, Poonam?
I think it's building brand heat, right? The first thing they have to do is get the right product in. So when you look at the product that's being sold in China, it's heavily discounted. In fact, Nike's perceived as an off-price label in China. So they need to flip that image. Absolutely. They need to move the discounting because that's clearly not good. They need to introduce premium product into the Chinese marketplace and then have local ambassadors, local clubs really, validate the brand for them. And all that will start with product first and then after. And we do think it's possible, but it's just there's so much old inventory there still right now that needs to be discounted. It's going to take, I think, at least 12 to 18 months.
If I'm an investor, that 12 to 18 month time frame, I'm not sure I'm that interested in it. How's the company trying to position its turnaround here to appeal to investors?
I mean, look, investors are not being patient, and we can see that with the reaction in the shares. Shares are down year to date, and Nike is just reiterating exactly what it's doing. It's talking about its playbook, lowering inventories, taking out discounts, getting the right product in. I think the next catalyst for Nike, in my mind, is going to be its Analyst Day. It's a day that we've been waiting for years. They postponed the last one they announced a few years ago. It'll take place in the fall, and we think that's when Nike will be able to really highlight the success it's had and also show its path forward with new inventory, new product, new collaborations, etc.
Poonam, how does this war and any disruptions from it, higher oil, the risk of inflation, make Nike's turnaround even more difficult? What challenges does it pose?
The risks of the war are not specific to Nike, I think. It's across the consumer space. Higher oil prices means higher gas prices. It impacts low-income consumers more than it does high-income consumers. Thankfully, Nike is a brand that probably leans more towards the mid to high end than the low end. So they do have some buffer compared to a low-end retailer. That said, if things prolong for a long time and inflation continues to tick higher, consumers will pull back, and the first place they pull back is on discretionary goods, and sneakers is a discretionary purchase.
Poonam, just step back a little bit. What's the competitive landscape for athleisure? Because there's so many. I mean, Nike used to be just, to me at least, a dominant brand, but it seems like it's gotten more and more competitive. I'm seeing brands of sneakers around here that I haven't seen before.
Yeah, you're absolutely right. Nike is still the dominant sneaker player globally. It is the largest footwear brand in the world. It remains that, but it has lost share over the last 5 years to other brands. Some of the brands that you may be referring to include On, Hoka, Asics, New Balance. All these brands and some others have gained traction, especially in the lifestyle and running space. That said, when you look at the size of those brands against Nike, there's still a wide gap. So we run a sneaker survey twice a year, and when we ask consumers, what is the choice of brand when it comes to sneakers, Nike's still number one. So when you look at broadly, Nike's still the favorite brand, but when you look into niche markets, you are seeing the rise of some of these other brands, which is obviously why Nike has been losing share.
Poonam, very quickly, what else stood out to you as some of the key differences in this report compared to prior quarters? Any metrics that caught your attention?
I think the biggest metric that caught my attention was the inventory levels. They have been dropping, and that's a really good sign because that just shows us that the efforts that the management team is putting in place is bringing in new product. And the new product results are actually quite impressive. If you look at the sales of their new products, they are up nicely, and that reflects that anything that they're putting their mind on is working.
Poonam, thank you so much. Appreciate it. As always, Poonam Goyal, she's a senior U.S. e-commerce and retail analyst for Bloomberg Intelligence based down there in Princeton, New Jersey. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access to the world's only global audio business network coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour, Bloomberg Intelligence starts in just moments with the S&P up 11 points, the Dow 140 points, but the Nasdaq up 100. 610. So one WTI crude oil up about 60 cents. Been pretty steady here today, just below $99 per barrel. More coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Coming up, we're going to check in with Stuart Paul, U.S. economist with Bloomberg Economics. We had a lot of economic data this week, so let's break it all down. Herman Chan's going to join us, senior analyst for the U.S. banks. We got bank earnings starting next week. I think Goldman on Monday, J.P. Morgan Wednesday. A lot of the banks reporting next week, so we'll get a preview there. It's Friday. That means we talk municipal bonds. You bet. Dan Close, head of municipals at Nuveen, will join us here to talk what's happening in the municipal bond market. And we're also going to talk to Steve Mann, Bloomberg Intelligence's global autos analyst, talk to him about Tesla and some of the other automakers and their impact they're feeling from the war in Iran. So a lot coming up in the second hour of Bloomberg Intelligence. But right now, let's head down to Washington, D.C. Amy Mars has got a Bloomberg Business Watch.
All right, thank you, Paul. Markets are mixed. Oil's a little bit lower. We check the markets for you all day long here at Bloomberg. The S&P 500 is up 0.2%. NASDAQ up 0.6%. The Dow is down 0.3%. 10-year Treasury yield at 4.3% and the 2-year yield at 3.78%. WTI is up about 0.75%, around $98 a barrel, and Brent crude is a little changed on the downside, hovering around $95, $96 a barrel. We have the first real numbers now on how a month of war with Iran has hit Americans' wallets. Bloomberg's Michael McKee has the March Consumer Price Index.
CPI on a headline basis comes in up 0.9 for the month as forecast, and that pushes the year over year to 3.3%. Remember, it was 2.4% in February, so a big jump. The core comes in up 0.2 on the month. It takes a while for stuff to get into the core, so that's not a surprise, although it's a little lower than anticipated.
Bloomberg's Mike McKee reporting, and that has bond traders trimming their wagers that the Fed will lower interest rates once this year. Fed officials have flagged the prospect of higher inflation, keeping policy on hold for some time as their preferred gauge of consumer prices is rising faster than their 2% long-run target. Investors are watching for signs that a ceasefire deal between the U.S. and Iran could hold Delegations are set to meet in Pakistan on Saturday. Round 2 of the Masters underway at Augusta National, and at last check, Sam Burns and Rory McIlroy share the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Alex Simonova and Paul Sweeney.
All right, Amy Marsh, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube and Bloomberg.com as well. As Amy was just reporting there, red and green on the screen here. Let's take a look at some of the stocks on the move. We can do that with Bloomberg's Natalia Kenijevic. Natalia, what are you looking at today?
Hi, Paul. Let's start with Nike. The ticker is NKE. The stock is down by almost 2%. We see that Piper Sandler downgraded the stock to neutral from overweight on concerns about athleisure, which is a combination of like athletic and leisure, where so the analyst is saying that it's becoming too saturated across the industry. And also Piper Sandler noted that despite the fact that shares reset after the last earnings report, they're still not cheap. As a reminder, Nike shares dropped by as much as 14% when the company reported earnings last time and disclosed a very steep decline in sales and said that those kind of pressure on sales would persist during the whole year.
Yeah, their turnaround story really not going as well as they had hoped. What else is on your radar, Natalia?
CoreWeave shares, we are watching at CoreWeave shares are up by 13, almost guys, 14%. The ticker is CRWV. We got the news that Anthropic agreed to rent data center capacity from CoreWeave as a part of its effort to train cloud AI models, and it comes a day after CoreWeave disclosed another deal with Meta Platforms. It's a much bigger one, $21 billion deal to supply computing power to Meta through 2023. However, keep in mind that also CoreWeave disclosed that it's going to sell convertible bonds, and to some analysts, investors, this is kind of a concerning signal because CoreWeave has a pretty large amount of debt and the company is still generating negative income.
And finally, Shake Shack.
Shake Shack, yes. So Mizuho raised recommendation to Shake Shack to outperform from neutral. The stock is up by 2%. The ticker is SHAK. The analyst cited some positive growth trends across same-store sales and also mentioned other catalysts like higher tax refunds and the World Cup.
Very good. All right. I mean, I'm a fan of Shake Shack, but I don't know about that. I think I take In-N-Out Burger over Shake Shack. I'm not sure.
I think there's an In-N-Out Burger supposed to come to NYC soon.
Is that right?
Yeah.
Wow, that'd be big, because usually I just get it out from out in Cali. All right, Natalia, thanks so much. Appreciate that. Natalia Kenijevic giving us the stock movers there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Well, we got a lot of inflation or just economic data this week. And today, topped it off with CPI. U.S. inflation surged in March by the most in nearly 4 years as the war with Iran sent gasoline prices skyrocketing. Let's break it down and get to the details underneath. We can do that with our expert skier, U.S. economist, Stuart Paul from Bloomberg Economics. Stuart, again, the headline number is 0.9%. That's not good, but if you take out some of the other stuff, maybe not so bad. What do you see?
I think that's right. When you look at the core, there was a material downside surprise in the core. Used auto prices are falling, very important. When you look at a lot of the discretionary services items, folks, there's this sort of items where people decide, well, I'm getting crowded out of technology because of high input software and for semiconductors. I'm facing higher prices for new autos because of aluminum prices. Gasoline is expensive. Where can I sort of flex my spending? It's mostly in discretionary services. A lot of producers and a lot of services providers are finding that they cannot pass along higher costs anymore. And so we're starting to see markdowns to encourage volumes to at least maintain pace. When you see that sort of retrenching demand, there's a little bit of an indication that growth risk is materially skewed to the downside, despite the inflation pressures we see from a cost push perspective. because of the war and because of supply chains getting snarled.
Stuart, how much of a risk is it that this oil shock can contribute to an inflation episode like 2022? I think a lot of people are worried about some similarities to 4 years ago.
Yeah, I think that a lot of folks are making that analogy, but material difference is that there's far less liquidity. Policy is a little bit more restrictive right now than it was back then. And the cash buffer that households have has been completely dissipated. You'll remember back in 2022, we were coming off the pandemic. Households were pumped full of cash by stimulus checks during the pandemic. That had been saved up to a pile that was almost $3 trillion at the time. That's now been entirely dissipated. So the extent to which inflation can broaden is really limited at this point. I think that one of the more interesting data points that we got today is that buying plans for durable goods released in the preliminary April University of Michigan Consumer Sentiment Index really dropped materially. Folks are feeling crowded out by gasoline prices, and they're pulling back on spending where they can. And when that's the case, when they're no longer bidding up prices of everything and anything, then that's sort of a redux of what we saw in 2022 or what we saw in the 1970s. That's just less of a risk today.
But we're not seeing that. Maybe it's probably too early. Do you expect to see that in consumer spending data? Because I don't know. Every time I doubt the consumer does way better than I would think.
Well, I think that the best we could do is just to try to quantify these big things, these big ideas. So what does it mean when we have something like a 21% spike in gasoline prices? What does that mean in dollars every month? And it's about $5-6 billion of spending from households every month that gets just taken out of consumers' pockets and sent to gasoline retailers and further up the energy infrastructure. And I mean, that's not a shocking amount of money, but that's $5 billion that they can't spend on Shake Shack or In-N-Out Burger when it finally comes to New York City. And when they're pulling back on those discretionary services, when they're pulling back on large household durables even, the broadening of inflation pressures is a little bit dissipated. One thing to also keep in mind is that households have less room to flex here because savings rates are just at 4%. It's about 2.5 percentage points below where they were during the pandemic. I mean, coming out of the pandemic, again, when we had about $3 trillion of excess cash pent up in households. So again, I think that potential for broadening inflation is relatively mute right now. Nevertheless, the Fed's going to keep its foot on the brakes, just stay on hold, probably into the end of the year until it gets a little bit more clarity around inflation expectations and the outlook for the war and the potential for supply chains to stay snarled.
We are nearing the end of Fed Chair Powell's term. I know Kevin Warsh's nomination got delayed, but there is going to be a changing of the guard really soon. How is that going to complicate the Fed's job at this time when they're trying to contend with the risk of inflation once again?
I guess I'm just a little bit more skeptical than most that there will be a changing of the guard anytime soon. There's been a reshuffling at the DOJ before there's been a reshuffling at the Fed. Who would have had that on their bingo card earlier this year? And it seemed, at least during the last cabinet meeting, that President Trump was relatively complimentary towards Jeanine Pirro, who effectively brought these charges and brought this investigation against the Fed. And when that's the case, it seems as though Senator Tillis from North Carolina is going to keep the kibosh on Kevin Warsh's nomination. And honestly, I wouldn't be surprised to see no changing of the guard until the end of this year. I know that's like a way out of consensus idea, but as somebody who spent many, many years in Washington watching how this parliamentary procedure works, I just think that way too much attention is being put on what Kevin Warsh would do, how enthusiastic he would be about interest rate cuts. And instead, I think that this is going to be a moment where effectively Powell stays in the chairman's seat, especially on the FOMC. It's a little bit more complicated who stays chairman of the board of governors of the Fed, but that's also far less important from a markets or monetary policy perspective.
All right, so no change potentially at the Fed over the near to intermediate term. Stuart Paul, thank you so much. We appreciate that. Stuart Paul, U.S. economist for Bloomberg Economics, joining us here in studio. We got banks We're going to be kicking off earnings next week, and they come fast and furious. They don't kind of space it out all. They just dump them on multiple banks each day. I don't know how the analysts
All
do
at
it.
once.
But exactly, all at once. Herman Chan is one of those analysts that has to deal with. He's a senior analyst covering the U.S. banks for Bloomberg Intelligence. Herman, we're going to get some of the big banks, J.P. Morgan, Citi, Wells Fargo, reporting next week. What are you expecting here?
Yeah, sure. So despite all the geopolitical uncertainties that have been weighing on the banks, we're expecting a really strong quarter. We're talking about EPS growth in the mid-teens. That really tracks with the guidance that the banks have talked about intra-quarter at recent investor conferences where investment banking and trading guidance was really strong. Also mid-teen growth year over year, and then lending's picking up. So we're seeing some increased lending, particularly from commercial borrowers, and that's not just in the non-bank financial institution bucket that's been getting a lot of scrutiny, but broader to your traditional commercial borrowers, small business borrowers. So that's actually been helping the banking industry as a whole.
Herman, Wall Street's biggest banks are expected to post a record $18 billion stock trading haul for the first quarter. How big does that number go? It seems like it's just been consistently rising. Quarter.
Yeah, that's right. So one good thing about the volatility that we've seen in the first quarter is that it's really lifting the trading activity both on the equity side and the fixed income side. So we're expecting really strong results across the board from Goldman that kicks off on Monday to JP, B of A, Citi, Bank of America. So everybody should be helped by this increased volatility in the first quarter.
I think in this earnings cycle, a lot of investors are going to be wondering to what degree, if any, will companies provide forward guidance given some of the geopolitical uncertainties. What do the banks typically do, and you expect any change to that?
Yeah, sure. So they typically do not offer some forward guidance on the trading issue that we just talked about, but it's more about your top line net interest income growth that's really driven by lending and deposits. So there'll be some commentary there, particularly with what's going to happen with interest rates going forward, right? So in the fourth quarter reporting last quarter, everybody was sort of baking in 2 rate cuts for 2026. Now it seems like rate cuts are off the table, so that will have implications for guidance going forward for the rest of the year.
Herman, the banks always give us a look at how consumers are. What metrics will you be watching there, and from what banks specifically on signs of, how the U.S. consumer is holding up?
Yeah, sure. So that was a great discussion with Stuart earlier about energy costs. So that's something that we're watching pretty closely. The thing that we're focused on, particularly with the consumer, is how things are trending in terms of delinquencies, early warning signs that there could be cracks in credits. I would say that a lot of the banks that have discussed intra-quarter have been saying that the consumer is holding up fairly well. The employment picture is still fairly solid. You're not seeing a lot of mass layoffs despite all the uncertainty with AI. At this point, we think things are stable, but we're really focused on what they're seeing early days in terms of how the consumer is spending, where are they spending discretionary versus non-discretionary, and those types of metrics that will sort of inform us about the picture ahead.
What are the banks saying these days about the private credit market, specifically the potential for credit quality problems, or is it just a liquidity issue? What are the banks saying?
Yeah, so private credit has been top of mind. I would say that the direct exposure to the private credit companies, we've done some digging. It's about 3% on average to direct lending to business credit intermediaries that are non-banks, so the non-bank financial institution issue that I was talking about earlier. So it's fairly small, but it is growing. It's been one of the growth drivers for the biggest banks like Wells Fargo, B of A, JP Morgan over the past couple of years. So without that loan growth, lending would have been flat last year. So it's really a big growth driver for the industry. We think that probably continues, but there are more questions than answers at this point.
Financials, Herman, worst performing sector in the S&P 500 this year, down 7%. Do you think that that gives runway to a nice rally if we get some solid results?
Yeah, that's a great question. We are going to see positive growth in EPS this quarter. I think the analysts are expecting about 15-16% EPS growth on average for the banks in my coverage universe. That being said, the stock's still screen fairly cheap. We're talking about like 1.4 times tangible, 12 times on a PE basis, so not heroic valuation. So there could be some catch up, especially given the fact that these are cyclical names, and if we have more certainty on the geopolitical front, these stocks could do better.
All right, Herman, thank you so much. We appreciate that. Herman Chan, he's a senior analyst covering the U.S. banks for Bloomberg Intelligence, joining us live in our Bloomberg Interactive Broker Studio. He doesn't mail it in on Fridays like a lot of people do. He comes in to the office. We appreciate that. Kind of got still red and green on the screen here. The S&P's up 15 points. The Dow's down 130, and NASDAQ is up 107 points here. So we'll keep an eye on that. Coming up, Steve Mann, Bloomberg Intelligence, Global Autos Analyst, talking about Tesla. That's coming up.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Wall Street, I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Investors are watching for signs that a ceasefire deal between the U.S. and Iran could hold, with delegations set to meet in Pakistan on Saturday to discuss shipping through the Strait of Hormuz. We check the markets for you all day long here at Bloomberg. S&P 500 up 0.25%. NASDAQ up 0.8%. The Dow is down 0.25%. Your Treasury yield at 4.29% and the 2-year yield at 3.77%. WTI crude up about 0.5%, around $98 a barrel. Brent crude up 0.2%, around $96 a barrel, and Bitcoin is up just shy of 1%, around $73,000. CPI data is offering a first look at the Iran war's impact on inflation, and it does look like it's hitting Americans right in the wallet. The March Consumer Price Index rose 0.9% to a year-over-year rate of 3.3%. Gasoline prices accounted for almost 3/4 of that jump, but housing prices also played a role. Round 2 of the Masters is underway at Augusta National. At last check, Sam Burns and Roy McIlroy share the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash.
Now on Bloomberg.